again, I suppose there's really two aims that we're setting out to achieve with everyone tonight. Firstly, it's to provide some insight into the underlying ideas and the underlying principles that led to the development of PF Director, things which Gareth deserves the exclusive credit for, but things which I've been lucky enough to be able to share with him and bounce ideas around with him over the past year. And more importantly, to hopefully leave everyone with some practical tips that they can take away and implement directly to improve the performance of their own businesses and the way in which they build their relationships with their customers and clients. We're going to start off with me, and I'm going to talk a little bit about, as I said, all those things Gareth and I have chatted about over the last year, which we crudely summed up as the importance of over and aboveness in business, and I'll be saying more about that in a moment. And it's over to Gareth to talk about what that means in practice and how that feeds into PF. So, in terms of what we mean by over and aboveness, I've got a question for everybody, I suppose, which maybe one or two people might want to contribute to in the chat box. But can people either name for me in the chat box a brand they love or a brand that they really dislike? Just don't overthink it, just whatever might come straight to mind. Is that a love or a hate, Ian? Great, so let's start with the BBC then. So, and then I'll come to a couple of others in a moment. So, what is it about the BBC that you love, Ian? If you could just give us one or two buzzwords. Trust. Honesty. Fantastic. And I'm going to ask you, Steve, now, what is it about Disney that you love?
Turn my microphone back on. It's magic, it's dreams, it's happiness, it's joy, it's family, it's connection, it's well, magic.
Fantastic. And Alan, what about Slack? Simplicity. And Phil, we all, those of us who know Phil could have told us. We're not I've had to ask him, but Phil, what is it about LinkedIn that you love?
Yeah, so I'm going to turn my mic back on as well. Apart from it makes me lots of money, it's the access to a database and being able to engage with people, not just from the UK, but all over the world.
Great. And the sort of things that you're all saying here are not a total surprise to me. And the first point I'm going to make is really quite an obvious one, but one that maybe we know intuitively in other people's businesses and take totally for granted in our own, which is that there are certain reasons why we're loyal to some brands who we love and will defend till death. And there are other brands who we won't touch with a stick. And it almost always has absolutely nothing to do with their raison d'etre. We don't love the BBC because they put TV programs on per se. We don't love Disney because they make cartoons per se. We love them for something else. It's that other ingredient that they put over and above the reason they're in business. And that's the secret to them building a relationship with us as their customers, to us staying loyal to them, and the reason that we stick with them rather than go into one of their competitors. So these are things which, like I say, I think intuitively we all know, but then we have to ask ourselves, well, do we actually reflect on our own businesses and what we need to be doing over and above our raison d'etre? Or do we get so bogged down in the daily grind that we forget to keep that at the forefront of our consciousness at all times? And we can ask the same question in a slightly different way. You can think of it as, and again, a pertinent example for the moment, I suppose, but what do nurses do over and above nursing? And nurses have to be, they have to nurse, they have to care, they have to be friends. Often they also have to be cleaners, and they have to be entertainers, and they have to be counsellors, and they have to do all of these things all at once as part of being a nurse. What do teachers do other than teach? Well, again, they have to be a friend to the kids. Often they have to almost parent the kids. They have a social work aspect. They have an administrative aspect. They have to be artists. They have to be fitness instructors. They have to be everything all at once, wearing many different hats all the time. And when we think back to our school days and think which were the teachers we loved and inspired us, and which were the teachers who we really didn't like or never got on with at all, it's usually something they did over and above what it said in their job description that made the difference. And again, these are things we know intuitively. But if we ask the question, okay, then what do accountants have to do over and above accounting? Then we can reflect on, if we wrote out every single skill, every single behaviour, every single piece of knowledge, piece of understanding, every single competence we expect accountants to have, my strong suspicion is the vast majority of them would be things over and above doing the accounts. And so one of the very first things Gareth and I spoke about was the fact that being a good accountant, running a good accountancy, having a strong brand in the field of accountancy and financial advice is about an awful lot of stuff over and above the raison d'etre of doing the accounts. And that led us to start thinking about what that actually means in practice and how we can build the tools and provide the tools that make that practice easier and more profitable. So I want to just note a couple of examples here, things which are relevant to me in the work that I've undertaken with Gareth and with others over the last year. Things which are hopefully food for thought no matter what sector you might be in. And the first one was around compliance. So lots of us will work in sectors which are driven by compliance. And I'm not suggesting for a moment that compliance is a bad thing. On the contrary, compliance raises the floor and it protects people by raising that floor and giving us confidence that the people that we have to put our trust in will be responsible with our safety, or responsible with our money, or whatever else it might be. So compliance is there for a very good reason. However, a confusion and a danger that can happen with a compliance-driven culture is that you set out to raise the floor and you end up lowering the ceiling. And if you have a compliance-driven culture, there can be a real and significant danger that you start to focus on the compliance, focus on the data behind the compliance, and forget to focus on the people behind the data. And any business that confuses a person with a data point does it to their detriment. So another risk, I suppose, as well with a compliance-driven culture, which we can't take for granted for a moment, is that by focusing on potentially the data and not the people behind the data, we can also be in danger of focusing on the maintenance of our performance rather than the enhancement and the improvement of our performance. As I say, once we're compliant, what's our incentive to be better? And that has to come from somewhere else. Outside of accountancy, lots of us will be familiar with quality standards, things like ISO 9001. We'll also probably all be able to name someone who we've seen or we've worked with in the past, or an organisation who's been a client of ours, who treat quality management as a certificate that they have to point to roughly once a year when they're being audited. Then they don't pay attention to it again until that cycle of auditing comes back around. And we need to move beyond that. If we want to be proactive accountants, if we want to be successful businesses, if we want to be growing businesses, we have to make sure that we treat compliance in the way that it should be, which is about making sure that we are meeting every standard we need to meet, but don't let it for a moment hold us back. And one area in which I've done a lot of work, and so where some examples of this come straight to mind, is in the realm of physical asset management. So for those of you who aren't familiar with that, physical asset management involves making sure that infrastructure and asset-laden organisations, that may be railways, it may be transport organisations, it may be energy companies, it may be water companies, are able to make decisions which make best use of their physical assets over 5, 10, 50, 100-year life cycles. And make sure that the balance of acquiring assets, managing assets, maintaining assets, disposing of assets, replacing assets is done in a way which optimizes performance and optimizes safety and keeps those two things in hand at all times. And the world leaders in asset management are debatable. AMCL are right up there, and they've been there since the very beginning. And we're actually behind the introduction of the International Standard for Asset Management, ISO 55001. And AMCL have identified 6 levels of maturity that they define in an asset management business. And I will share the slides here so that you can share this scale, because I think this has value no matter what sector you might be in. And I'll explain why in a moment. So here's AMCL's asset maturity scale. everybody see that?
Yep.
Fantastic. And they have those 6 levels, starting with innocent and moving up to excellent. And bear in mind that any organisation who have to take asset management seriously do not have asset management as their raison d'etre. They're making sure water comes out of the tap when you twist it. Or their raison d'etre may be making sure that trains can always get to their destinations safely. So asset management is one of their over and aboves. And if they're an innocent organisation, it means that they're starting to learn about the importance of asset management activities. And that moves through to being aware, to developing, to becoming effective, and finally to becoming excellent. And an excellent organisation has asset management activities which are fully integrated and being continuously improved to deliver an optimal whole life value. Now, if we think about what that means in relation to my earlier point, the first question would be, where do you think your business lives on this with regards to all of the things that you need to do over and above your raison d'etre? For most businesses, strong communication skills are something that they need over and above their primary reason for existence. In terms of communication, are you innocent? Are you aware? Are you developing? Are you competent? Are you effective? Are you excellent? Every over and above that your business needs can be mapped to this scale. And with regards to compliance, compliance aligns pretty well with competency. So if you have developed embedded practices, then you're competent and you're probably compliant. But if you're looking for things which both don't have a compliance standard alongside them, or which require you to really push on and grow your business, then you should always be striving for excellence. And a key point behind excellence is that it's related to culture. To be able to develop and point to a behaviour is to be competent, but to be able to say it's fully integrated, being continuously improved, that's really down to it being deeply entrenched in the culture of your organisation. And everything that you believe you should be doing over and above your primary cause should be embedded into your culture as an organisation. You should be excellent, not innocent. And the second thing I wanted to mention, just as a simple case study, comes from the research of Robert Cialdini. Cialdini published a book called The 6 Key Weapons of Influence in 1984, I think it was, something like that. And there was a case study in that book which has really stuck with me since I first read it. And some of you will know, but for those of you who don't, I'd like to share it now. And what Cialdini investigated was tipping cultures in restaurants in America. And in a simple study, it started off by setting a baseline, setting a benchmark, by looking at what the average tip was when someone was getting the bill. And then a very simple experiment controlled one variable. So that one variable was, what if we leave a mint with the bill when we hand it out? What they saw was the bill plus the mint equaled a 3% rise in the tip. So that begs a simple question. Okay, what if we leave 2 mints with the bill? And you may assume, okay, well, you'd assume if 1 mint's a 3% rise, maybe 2 mints will be a 6% rise. But actually, 2 mints equated to a 14% rise. So over 4 times the tip in return for 1 extra mint. So a good investment. And then, unfortunately, for these waiters and waitresses, this wasn't a never-ending linear progression. So they couldn't just dump a bucket full of mints on top of the customer and expect £1 billion tip. But what they did look at was, well, rather than 2 mints, what if we do this? What if we give the bill with a mint, walk away from the table, turn around, walk back, and say, oh, for you nice people, here's another mint. And then put the second mint down on the table afterwards. And when they did that, that actually increased the tip by 23%. So a really significant increase in the profit simply by investing, which are really honed in on the relationship between the client and the customer. And a key point which has stuck with me with this when I've thought about it since is that it's not just what you do which will lead to impact, but it's how you do it. Giving 2 minutes to a customer was what they did. How they did it led to an extra 9% increase in their margin. So how you do it can have potentially an even bigger impact sometimes than what you do. So not only is focusing on the over and above, and not only is focusing on making sure that over and above is culturally embedded, important, but how you then go about making that a practice is just as important to do, if not even more. And that then leads us back to PF Director. Before I hand over to Gareth, just one simple thing to share with you. And it's a question that we've been asking different proactive accountants from around the UK over the last couple of months. And we've been asking them simply what it means to be a proactive accountant. I'm going to share some of the results with you here. And they gave us a really rich picture and told us stories and gave us insights into their own practice. Having gone through all of them line by line, we've been able to summarize 6 principles which came up with virtually every single person we spoke to. And being a proactive accountant was about always wanting to learn and develop. It was about embracing new tools and technologies. It was about being an avid problem solver, about building positive relationships with work colleagues and with clients and customers. It was about having those excellent communication skills. It was about being able to empathize with the needs of every individual and tailor the service to meet the needs of those individuals. And not only that, but they also told us that by doing these things, it led to improvements to their professional reputation, improvements to the reported satisfaction from their clients, and bigger profit margins at the end of it. So wanting to learn and develop, being able to embrace tools and technologies, wanting to solve problems, wanting to build relationships, communicating well, being empathetic and accommodating. These are all the over and above which we need to be excellent at, embed into our culture, and really focus on how we do them and how we do them well. And if we get that right, our reputation should increase, our client satisfaction should increase, and hopefully our profit should increase. So that's effectively a 15-minute summary of every conversation Gareth and I have had for the last 18 months. But at this point, it probably makes sense for me to go quiet and to hand over to Gareth so he can tell you what you actually are here to find out, which is how he's translated all of this into PF Director and how we really hope PF Director can make doing all of these things a little bit simpler for all of its customers. So I'm going to stop sharing my screen and hand over to Gareth.
Thanks very much, Mike. That's fantastic. Yeah, so just like to, before I dive into PF Director, the features and benefits of it really, and talk you through the journey that I've gone through, I'd just like to recognise that there are other over and above for accountants. A few of these I've borrowed from an AVN masterclass that I went down to 2 years ago, which was the first time I met Steve in person. Just fantastic ways of just making a difference to your clients and breaking the ice and all different things. So things like just thinking about one way that you can help your clients at every meeting you go to, over and above, you know, just giving them financial advice, whether it's getting them in touch with perhaps, you know, one of your other clients, making that connection, just something that unexpected. This one's one of Mike's, so it's you know, it's offer cake every meeting, offer some cake. Who doesn't like cake at the end of the day? Rather than just have a drink, give them cake, just little things that make a difference. Parking, so get a designated parking spot for your client when you know they're coming. Give them a sign outside, a temporary sign, just to make them feel, you know, really worthwhile. Send them a birthday card, send them a Christmas card, put a jukebox in your reception, let them choose their own song while they're waiting for the meeting with you. Something that I've done recently is start a bookkeeping club every month. So I spend 4 hours every month, and people that want to come down and ask questions about the bookkeeping, or even just to get it done, they come and just sit down and have a chat, and it's great. And it's something that I don't need to do in my accountancy practice, but it's something that, you know, really adds value, I think, and helps people out. So moving on to the reason why I decided I needed to develop PF Director. So when I started my own practice about 10 years ago, in 2009, 2010, I used to do things like most accountants do. So I do obviously do the year-end accounts, I do the corporation tax returns, I do the self-assessment, do the VAT returns, do the payroll and everything else to do with compliance. And it's great. And I still do all that. And it's a great baseline to start from. I'd answer queries as and when they came in from clients. So it's very much the client that led that interaction on when they needed assistance. I did the normal things like the pre-year end agenda, the meeting. So I'd get, a list of items, generic list, fairly slightly tailored to the client, but have you thought about contributing to a pension? What's your stock level? What's your bad debts? All different things like that. And then I'd also give advice when there's opportunities across the board. So things like if there's a change to the income tax personal allowance, if there's a change to the best way of generally extracting profits from your company, if there's a new flat rate adjustment, so the low cost trade when that came in. So I was very much legislation led in terms of what advice I'd give to my clients. So I'd say, right, there's this change coming in. Which of my clients is it relevant to? Whereas what I should have been doing was thinking, okay, let's look at each individual client. Let's look at their background. What are their needs? And then seeing which of the thousands of things that are out there in terms of legislation could help them in particular. So I was doing things backwards, really. And so what lots of accountants do without thinking of it. And it's generally because they don't have the time to spend on each individual client. They don't have 4 hours every quarter for each individual client. It's just not possible. What the problem I had was that I knew what I needed to do to get more involved with each individual client, but there's no system out there or software out there that enabled me to do it. So things like the Xero, Receipt Bank, they all speed up the processes, and they're a great way, and they've got great advisory services for the business themselves. But I felt that in order to advise the business owners, I had to look at their personal circumstances as well as the business. So that's what I wanted to do, really. 2 years ago, I sketched out a framework, which slowly developed over time in order to provide me more value. It will help the clients to achieve their goals. It will tie in the financial well-being as well as the general well-being as well. And I wanted it to optimize the use of my time and build a deeper relationship with the clients, and obviously increase the fee income as a result because I'm providing more value to the clients. And then I'd just like to share with you the slides, and I'll just talk you through in a few minutes really what has taken me 2 years to develop so far. So I'll just let this share on a go. Can everybody see that? Okay, right. So the first aspect of PF Director really is it's asking the question, where is the client now? So it's a data gathering exercise, really. It's about building a relationship with the client. It's about getting data that you otherwise wouldn't have, but you should have to give a holistic service to that particular client. So things like the personal net worth, so in-depth information about the individual's personal assets, so their business, their personal bank account, if they've got a pension fund, if they've got buy-to-let property, the business itself, but not just looking at, okay, what's the value of each of these individual things, looking at all the information behind that. So for example, in a business, what PF Director does, it records systematically things like the business structure, the ownership percentage, how many employees the business has, do they work from home, do they use a car in the business, how much equipment are they expecting to spend, how much money are they expecting to spend on equipment in the next 12 months, are they VAT registered, what VAT scheme are they on, have they got zero rated supplies, are they planning on selling the business soon? So all these in-depth things that you might come across in a meeting generally and you might think to ask, but there's no system to make you ask them. And it's all this information that actually, when you put it all together, it allows you to give a lot more value in the advice that you provide after. So in the data gathering aspect as well, we also look at the personal income streams and the expenditure, the outgoing personally of the client, the business owner themselves. And that provides a picture and allows us to extrapolate, the bank account balance over their lifetime, really, and see if they meet their targets. But interestingly, what PF Director does that no other software that I've seen does is it ties in the well-being measures. So a lot of people think that, well, why is an accountant talking about well-being? Well, I feel that if you're not asking well-being questions such as how anxious are you at the moment, how happy are you, how many holidays have you had, how many do you want, how many days do you want a week, when do you want to retire? If you're not asking these questions, then you're not looking at the whole picture. And really, each of these well-being questions, so things like stress level and anxiety, they're correlated to something financial as well. So if the business owner is more stressed, then there's a good chance that he might be earning a lot of money, but perhaps if he could take the hit on a bit of money, so earn a bit less potentially, or perhaps delegate some of what he's doing at the moment if he's overworked to somebody else. Okay, yeah, he might drop his profits a little bit, but he'll be a lot less stressed. So it's making the correlation between the well-being aspects, the non-financial aspects, and also the financial aspects as well. So it's about providing a holistic service, really. Also, we've got something called a client environment. So every time there's a snapshot, so every time all this information is recorded, perhaps it's every time you meet the client, either remotely or in person, then the client environment data is there, and it asks, what are your assumptions on certain things? So how much money do you need to live off at the moment? Do you need to extract all the money out of your business, or are you happy leaving it in your business if there's a benefit to leaving it in the business? Things like, you're planning on moving abroad anytime soon, and if you are, when? Are you risk adverse? Lots of different things, really. So all this information, it creates a picture of where the client is at now, and it provides a baseline that then we can take on and compare with where they want to get to. So that's what we move on to next. So where we want to get to, if I just move the slide on, if I just move it. So yeah, identifying the client's goals, really. So we're talking about specific goals. So things like, how much money do you want in your bank when you retire, for example, or how much money do you want in your bank to give to your kids, after you've retired, things like that. But it's not just about the bank balance. It's about, do you want buy-to-let property? What do you need in your pension fund? Do you want to have paid off your mortgage by a certain date, or you're happy to keep going on? There's also things like, it doesn't have to be retirement. It could be, when do you want to sell your business? What's your exit strategy? It's tying in all these things. And as well as the financial side of things, it's also, for each of those well-being stats that we take when we gather the data, there's also targets for those. So, okay, at the moment, your stress level's 10, but your target's perhaps, 1. Obviously, you don't want to be stressed. So it's about meeting those targets and identifying what those targets are, and just, it shows a historic path, really, of how you're doing and what's working, what isn't working. And again, it ties in the non-financial well-being with the financial well-being. Okay, so if we move on to the next slide. So how's the client going to get there? So this is the interesting one. It's a bit that I like. So all these features, they allow the advisor to display the real value to the client, really. And so we've got an integrated action plan, which includes a basic actions which can be input by either the advisor or by the client. So, and generally they increase the bank balance. So it might be something like, we have a marketing campaign, and we think it's going to make us £20,000 over the next 3 years in additional net profit. So we can log that in and say, actually, the bank balance is going to increase by that amount of money. But we've also got advanced actions which can be programmed into the action plan. So you can think of them, if you're from an accounting background, as a double entry bookkeeping, but for the future. So you can plot a buy-to-let purchase of a property in 20 years' time. You can plot all the effects on all the different assets and liabilities that will have. So you'd increase the value of the property that you've got personally. You'd increase the mortgage on the credit side. You factor in the legal fees that you expect in the stamp duty, all different things, and you can put a detailed map of what's going to happen in the future, and that will be reflected in all the forecasts going forward in the charts that I'll show in a minute. So it provides, a lot of data, and it's tangible. You can see it, and it's something that clients don't generally have. Generally, when you speak to a client, if you're not asking the right questions, they'll say something like, yeah, I want to buy a buy-to-let property in the future, and I want to live off the rent. And that's as far as you get, really. So you might help them to plan ahead a bit for that and think, oh, have you thought about this tax planning aspect? But there's no specific and tangible, way of programming that into any sort of software that I found so far. And it's one of the reasons why I increased PF Director is for that additional flexibility. So moving on from the action plan. So the next 3 items, the tax planning hub, the personal wealth hub, and the smart advisor, these are all tools that the accountant can use behind the scenes that allow them to import items into the action plan. So for example, a tax planning hub, it's a database really of tax planning ideas, a general database. So it's VAT, income tax, it's inheritance tax, it's CGT, national insurance. So all different ideas, not tailored to the client. It's just a flat database. It's ever expanding. It's getting bigger and bigger all the time as we're adding more and more things into it. As I say, the accountant can look behind the scenes and think, right, that's relevant to this client. Let's add that to the action plan and put a financial value on that action, the benefit it will make to the client. Next, there's the personal wealth hub, which is a similar thing, but it's for personal cash flow, really. So it's improvements that a client can make to the personal cash flow, because obviously we've taken the information on their personal income and personal expenditure. So we've got an idea of what they're spending, for example. It might be that they're eating out and spending £800 every month on eating out, but they're not able to pay the VAT bill. So you might spot that actually, we can incorporate that to reduce that expenditure down, and put that into the action plan. And then obviously every meeting they come back and they can hold themselves accountable because they've written down they're going to decrease that value. And it's just, I don't know if anyone's ever downloaded their bank statements and actually had a look and categorized out what they spend as if they were putting it into accounting software themselves, but their personal bank statements. And it's quite shocking sometimes what money adds up to. And it's a good way of making quick gains really on savings. So the tax planning hub and the personal wealth hub, as I say, are flat databases. They don't change. We add to them, but they're not tailored to the client. But so what the smart advisor does is it brings all the actions and the advice items from the tax planning hub and the personal wealth hub into one big list. And it's the picture you can see on the screen, hopefully there. And what it does is, because we've collected so much information in the system previously, for example, all the in-depth details on what the business is, is it sole trader, all different things, is it VAT registered, in depth for everything. So the pension fund, it might be the bank, it might be the income they make, it might be the expenditure. And all the client environment data and all the well-being, it brings it all together, and it gives each of those advice items that are in the two hubs, gives it a weighting in terms of relevance. So it might say, well, actually, an example is that accountants are familiar with is, should a business incorporate or not? So it's actually number 3 on that picture I can see there. So the considerations that accountants would generally make is, okay, how risky is the business? Are they worried about paying the business debts? What's the profit level of the business? What's the business owner's other income? What's the personal cash requirement? So do they need to take all the money out now, or can they leave some in the business? And that'll have a big effect on whether to incorporate. Are they organised? Are they happy doing the bookkeeping? Are they happy with the extra admin burden of incorporating compared to staying self-employed? So all these questions, all the information's already there because it's been collected previously at these meetings, at these snapshot meetings. So behind the scenes, the client doesn't necessarily see this. It's only available for the advisor. The smart advisor looks at each relevance for each individual item out of the hundreds and hundreds of items, and it gives it a smart score. So obviously the higher the smart score, so it's a function of impact and relevance to the client, will produce a smart score. So if it's higher, then obviously the accountant might want to think about discussing that with the client, So it's a really powerful thing that it's not really been done before. There's a few packages out there that do very specific tax planning. So what we've done is we've incorporated that tax planning aspect of it, but we ask so much more in terms of questions, and we also tie it in with the financial goals and the well-being as well. And it's the whole process is, because it's done every year or every quarter or even every month if you want to with the client, it builds that relationship and it creates a long-term relationship with them. So the client will want to stay with you because they love the process. They love to see how they're doing. So that's the bit I'm really excited about, really, is the smart advisor side of things, and it's something quite unique, really. The next slide is how's the client doing? So my progress. So when I first created this, I wanted to make sure that it's very graphical, very clear. It's very easy for clients to understand who haven't got any financial background at all. So hopefully that's what I've done, and you know, it works in terms of understandability. So the My Progress area provides, you know, extremely visual representation of how the client is doing. So that's the overall net worth. So is the personal net worth increasing? Is it likely to keep increasing? But also you can break it down on an individual asset, personal asset and personal liability basis as well. So you can look at exactly, you know, the value of your property. Has it increased as much as you hoped it would do? Your pension fund, the same with that, you know, all different things, all different. Have you paid off your liabilities? Have you paid off your credit card? Have you paid off when you expected to pay off your mortgage? All different things. But also it allows you to compare where you are now in terms of your current snapshot with the previous expectation of where you would be at this point in time. So there's accountability there to really look back at, you know, actually you thought your net worth was going to increase by, say, £5,000 since we last met, but actually it's increased by £7,000. So why is that? What have you been doing that's right? What's working, what's not? But as well, it forecasts into the future. So short and long-term analysis of the finances, really. So it's the current snapshot, the most recent figures that have been plugged into the system. We have the assumptions that have been made in terms of interest rates increases, the client environment, and any actions that are sitting in the action plan. It's all integrated and it produces an expected net summary and each individual asset as well. Expected curve for how you're going to get what you're going to get to, really, what you expect if you do what you say you're going to do, what you plan to do. And obviously you can compare that. You can probably see, or you might be able to see a little purple dot there on the chart on one of the images at the top. That's essentially the target that they hope to get. So it's just looking at, are we on track to hit the target? So whether it's retirement, you know, how much net worth do you want at retirement? It allows you to see on an ongoing basis, every snapshot, how you're doing. So as well as the My Progress modules, which are available to, you know, the clients and the advisor themselves, the client can log in separate as well. We've got a financial wellbeing report that the advisor can give to the clients after each meeting. So it's a 10 or 11 page PDF at the moment that provides a lot of clear, it's very graphical, just like the My Progress. It's just a clear representation of how the client is doing, both in terms of the financial wellbeing and the general wellbeing. So stress levels and things like that. It lets them record how they're doing compared to the last time. And also what I'm really excited about is the impact statement that Steve's had a lot of involvement of, and I'm very grateful for his help with this. So what the impact statement does is it looks at the changes in that expected financial forecast value in terms of since the last meeting. So the actions that we've analysed with our clients, how much have they improved, or how much do we expect them to improve the client's financial situation over the course of their life, or up to whatever the target date is. And it plugs in the difference between, you know, the increase between what they expect now and what they expected last time, but also on a cumulative basis. So when they first started the PF directed process with the client, how much value have they given to that client in terms of the forecasted financials for their lifetime? And it's a very powerful tool that can then be plugged into the impact statement, which Steve has produced with his Give and Get a Million campaign, which is fantastic, which just, it allows us as accountants to show the value that we provide. So I think a lot of accountants are guilty of not blowing their own horn, really. And, you know, they do what they do and they expect that everybody knows what they're doing, but it's just not the case. And things like this allow them to really show the value. And obviously when you're comparing these sorts of values, the incremental gains that they're making over a lifetime for the client, it's quite powerful to, when you're comparing that with your fee that you're charging to the client. So it's a really great way of doing it. And I'm very grateful for Steve for all his input that he's had with the impact statement. So just very quickly, going to run through a couple of other tools and features that are in PF Director. So we've got an inheritance tax conversation starter. It's a very high level tool. So because we've already got the information which says their expected net worth or their target net worth is going to be so and so, it's going to be £3 million or whatever it is. We've got the information we need to be able to produce a very high level potential inheritance tax calculation. So it's something that the accountant can sit down with the client and say, explaining, simple terms what inheritance tax is. And at the moment, based on what you said you're going to do and where you're going to get to in your lifetime, your kids are going to be lumbered with this large inheritance tax bill, if that is the case. So it opens up a new conversation with the client, and obviously there's additional income stream there for the accountant if they want help with mitigating that inheritance tax bill, because it's never too early to start planning for inheritance tax, as most people know. So that's the first tool, and it's a great tool that I love myself. We've also got things like the ability to bulk import clients from CSV file. Along those lines, we're also integrating at the moment, it should be ready in the next 2 weeks, a Xero integration. So if anybody uses Xero for their bookkeeping, if the accountant uses it for their own bookkeeping, if you've got all the clients stored on there in terms of the contacts, then at a click of a button, we can import the clients from there. So it saves a lot of time inputting clients manually into the system. We can allow multiple advisors. So if you've got perhaps 3 directors or 3 senior managers that are using this tool with their clients in your firm, then each one of those advisors can have their own login, and obviously it can give them their own branded reports with their own picture on, their own name on, rather than just a generic firm as well. As well as having separate advisors, you've got separate team members. So perhaps you want to give somebody in your office the ability to just enter snapshots, or just enter action plan items, or just look at the reporting. And there's lots of different access rights that can be set up there. Or perhaps you want to, you've got a portfolio of clients for each individual user. You can allocate team members to a portfolio of clients, just similarly to that you can do in compliance tools like Xero itself, or perhaps in Tax Calc or Iris. As I touched on earlier, the client's got their own login. So after each meeting, each session, they can go back at any point in time and they can log into their own area and they can see certain things within the portal. So they can enter their own snapshot, which obviously saves time. It saves you from entering the snapshot yourself. But also they can look at the action plan. They can look at what they're meant to be doing between the last meeting and when you're next going to see them. They can look at the progress they've made so far based on the previous snapshot as well. And so again, it's a very visual representation. It's very clear to understand. And also, as well as that, it's co-branding. So throughout the portal and throughout all the reports, it's not PF Director plastered everywhere. It's the accountancy firm's logo and the particular advisor and perhaps their picture as well, and a bit of information about the firm. So we very much wanted to partner with the accountancy firms on that. So these are the main benefits really in a nutshell. I'm just going to go through them very briefly. So I feel that what I've been talking about and what we've built is a very useful tool. It's something that I've been using with my own clients, and I've definitely been providing more value to my clients. I've definitely saved time in terms of not having to enter data all the time. My clients enter a lot of data that is needed by the system. It's definitely differentiated, especially in the early days of PF Director now, because obviously there's not many people using it at the moment in terms of accountancy firms, so you're going to stick out in the field. It helps me to retain more clients. As I say, it's a long-term process. The clients, once they get the first PDF report and see the value that you're providing, they want to come back the next time, perhaps in the next quarter or the next year, because they enjoy the process, and it's quite addictive, to be honest, to see where you're up to. I do it myself personally as well. It's good. Build deeper relationships. Obviously, you're meeting the clients more regularly, even if it's virtually, not in person, and you're asking questions that they've probably never been asked before, but they should have been asked, really. If you're going to give them good advice. Obviously, you become a trusted advisor. If they pick up the phone, it'll be you that they call if they've got a question regarding accountancy or tax, or perhaps business growth aspects, because you're just the first person they think of because you're so entwined with their business. And obviously, it goes without saying that you're going to get more referrals if the client's happy with what you're doing. And ultimately, all these items come together, and at the end of the day, your fee income will increase because you're providing a lot more value, and your clients are happier to pay that increased fee because they are getting so much value from you. And I'm not going to go on any sort of sales pitch here, but I just want to, I'm an accountant after all, not a salesperson. I might have to get Phil to help me with that. But what I want to say is that I appreciate you spending the time coming to this, and I want to offer the accountants out there a bit of incentive to really take up PF Director. So you can go to the pricing page, which is listed there. It doesn't show this offer on it, but what the offer is, so there's a built-in guided walkthrough. It will take you through the onboarding process of really getting set up with the software. There's a 14-day plus trial. So the reason I've put 14-day plus is because you'll see when you go through the onboarding process, it's quite quirky. So when you look at each feature and use each feature for the first time with the package, it will add extra days onto the trial period. Because it says, okay, you're enjoying using it, you're getting involved, so we're going to reward you with a few more days. But the main thing is that I'd like to give anybody that is watching this really the multi-advisor package, the top level package, which is normally £150 per month or £135 per month if you pay annually. They'll get that for the cost of the basic package at the moment, which is £80, and if they pay annually, it'll be £72 per month. There's a lifetime discount, so they'll get the highest package at the lowest package price for the length that they stay with PF Director, and I'll personally also either jump on a Zoom call, every quarter, every month, initially as well, to have a chat and talk them through and help them get set up as well. So yeah, thank you very much for listening, and I'll shortly hand over to Steve.
Thanks, Gareth. I'm just going to quickly jump back in here before we do hand over to Steve. In a few moments, we'll see if there's any questions from anybody, and then I'll go over to Steve to take over. And there's just one final thing to share, really, and to sum up from the conversations Gareth and I have had, and in the context of everything Gareth just said. And we were sitting down a few weeks back and looking at all of these different functions that PF Director has and working out how on earth there's almost so much in there, it's hard to explain, which is a nice problem to have, but it's a problem nonetheless. And so we played around with this, and we ended up with something like this that hopefully you can all see on your screens now. So we realised that really we were talking about crudely a plan, do, check, review, or a plan, do, check, act cycle. We want to work with our clients to help them assess where they are and plan for where they want to be, support them in going and carrying out all those actions they need to carry out, monitoring that progress and checking how they're getting on, and then reviewing it, reassessing and updating the plan accordingly, and building that cycle of continuous improvement into the way we work and into the way we think. And so what Gareth's done truly and mind-boggling with PF Director is effectively found a tool that can support every single aspect of this cycle. And all the things Gareth's been talking to you about over the past 10 minutes, the ways of either planning or doing or checking or reviewing, and each one of these should make those key tasks slightly easier to carry out. And we've called it the advisory tree because we shoehorned in grow at the bottom there, and we felt it was a tree for two reasons. Partly because in terms of its growth, it's not just about doing all of this to grow the business that you're working with, but by doing this consistently with all of your clients, you'll grow your business too for all the reasons we've explained. And every one of these features should help you either to make your clients' lives easier or to make it easier for you to manage your internal goings on and to grow your business as well as growing theirs. And the tree felt like the right analogy for us because first and foremost, it's about growing relationships, growing opportunities for your clients, and in virtue of that, growing opportunities for yourself. Without further ado, perhaps people can feel welcome to take their microphones or cameras back on there should they wish to, or in the chat box if you've got any questions for Gareth or for me, I suppose. We can have a few minutes to talk about them now before we hand over to Steve to continue. There's one for you there, Gareth.
Okay. How much would you recommend charging clients for PF Director, driven meetings or advice? It's a good question, and it will vary from firm to firm, I think. So personally, in my own firm, I build it into a package from the client. So I incorporate all the advisory with the compliance side of things. I found that's a good way of selling it, really. So for example, for my firm, I charge £400 every quarter if they want to sit down with me every quarter to do it. And I find that there's not been much pushback in terms of that. It'll vary throughout the country. I mean, Wrexham isn't the most affluent of areas. So obviously if you're down in London, then, you know, potentially you'll get a lot more. But what I would say is that you could run these meetings for free and you would still make money in terms of how much value you're giving to the clients. When you're building that action plan within the system, each one of those items that you're adding to it, there's a good chance that you're going to be able to help the client, and it's going to bring additional work for your firm anyway. And that's the way of adding value, really. So you could run it for free if you wanted to. You could give the first meeting free, get them set up, show them the value of it, get those additional services that you can help them with in that first action plan, and then perhaps, you know, give them a quotation for whatever you feel, you know, is a good value for them. And so it's a good question. So the next one is from Ian. So spoke about pre-year meetings and other such interactions with clients. When do you think is the best time to introduce the concept with clients? Personally, I try to tie it in at the pre-year end meeting. That's the obvious one to think of, really, because that's when you're sitting down with a client traditionally once a year. It's one that a lot of clients are most comfortable with. But I think it depends on the client. Some clients, the larger clients, they might want quarterly or even monthly sit downs with you. But yeah, I think definitely at least annually it needs to be. If you're going to keep on top of that relationship with the client, it needs to be annually, at least. And then I've got a question from Phil. How long does it take to carry out a snapshot? It's a good question, Phil. It'll depend on the complexity of the individual client's affairs. Obviously, if someone's got 20 buy-to-let properties, 7 businesses, 3 pension funds and whatnot, and lots of different income streams, then it's going to take a bit longer to set it up in the first instance. I'd say generally, I sit down with my clients for between 1 and 2 hours at the start, and I really make sure that that first snapshot is correct. Sit down with them, or maybe do it virtually. But then for the second and ongoing snapshots, I often allow my clients to input snapshots themselves before the meeting. That allows me to not worry about the time spending on data input, essentially. I let them do that. And then when we come to the meeting itself, I've already got information there that allows me to look at, you know, in the Smart Advisor, how I can help that client before they even come to the meeting, because I've got their up-to-date information. And I can spend that whole meeting just adding value to the client rather than data input, as I say. A question from Andrew. Do you see the problem you've built being adaptable of use to other industries and professions outside accountancy at some point in the future? I think definitely. I think there's the obvious tie-in with IFAs, independent financial advisors, in terms of most accountants, they don't have the FCA regulation to make specific recommendations on things like which particular pension scheme should that individual contribute into, or which investments will they want to look at incorporating into their overall plan. What the accountant can do is obviously say, have you thought about investments? Or have you thought about a pension scheme? And I know this person who can help you, the IFA, and they can refer the IFA. And they could even bring the IFA in now as an additional team member or an additional advisor into PF Director. However, it's always been on our radar that we'd incorporate an IFA aspect to it as well. So a market to IFAs in terms of they can add a lot of value. There could be a partner portal in there whereby IFAs can help out with actioning a lot of the plans that accountants perhaps can't help out due to regulation. There's also the other side of the target date, really. So perhaps if it's retirement, the IFA can help more in terms of how long will the money that they want to have in retirement, how long will that last them after retirement, based on their expected, their life expectancy. So there's a lot of opportunities. They're the obvious ones. There's obviously bookkeepers could use this, growth gurus as well. They could jump on in. It's not accountant specific. However, it makes a lot of sense for accountants to use it. Obviously I'm an accountant myself and that's why I've built it. But yeah, there are other opportunities out there. So thanks for the question. Just bring Mike back in. So Shall we hand over to Steve Pipe now, Ike?
Absolutely. Thank you for your patience, Steve.
Oh my goodness, no thanks required. Oh, well, there are thanks required actually, and they go in the direction of us to you guys, because what you have just shown me, us, has quite frankly blown my mind. I wish I had this when I was in practice. My goodness, I get completely why you've created this, and I think it's massively powerful. And actually, at this point in time, your timing could not be better. I don't know about you guys, but I've just spent a good chunk of the last week reviewing my finances, my personal finances, our family finances, really carefully in the light of the situation we now find ourselves in. And I think everything is going to change going forward, and clients need reassurance. They need help. They need a plan. And that plan goes way beyond their business. It reaches out into the thing which is actually far more important to them, which is their families and their family finances and their family's financial future. And what you've just given us is an incredibly powerful tool, which has never been more needed than it is now when we're in coronavirus lockdown, and the economic consequences of that are really going to start to hurt. So thank you from us to you guys. I wasn't intending to say that stuff, but that just because you've just blown my mind. Probably a good idea if you guys turn your cameras back off, and then I'll share my screen and stuff. But I wondered, what I did intend to start with was a question to everybody, really, and that's a very simple question, which is, in the final analysis, which is actually more important to you, your family or your business? If you're going to rescue one from a burning fire, which one would you rescue, your family or your business? Which is more important? In fact, type in. This is not a rhetorical question. This is a deadly, deadly serious question. Type into the chat box, which of those two words. I know there's times you want to strangle your family, but, in principle, in general, which is more important? And definitely for Gareth, it's family. Definitely for me, it's family. Pete says family, but don't tell my business. Well, yeah, we won't. Don't worry, your secret's safe with us. So far it's every single person's put the family first, and that's that is universally the answer to that question, isn't it? Which begs the question to me: so why is it that the accounting profession focuses almost exclusively on the business and not on the family finances? Because if the family is more important than the business, why would we just look at the financial situation of the business? Why wouldn't we broaden our service, broaden our understanding, broaden the value that we bring to focus on the thing that's even more important to us and even more important to every single one of our clients, which is our family? And what you've done, Gareth and Mike, is give us a tool that allows us to restore that balance, to go back to this thing which is way, way more important, and which at this point in time, more than ever, we recognise as more important, because we are all now running scared for our families, and we're all now wanting to do the best for our families. And actually, we appreciate that the stuff we have in the cupboard, and the toys we have, and the big fancy cars and the holidays we have, don't in the final analysis mean as much as our family. So what you've given us is an incredibly powerful tool for that. Now, what I thought I would talk about, and it fits in even better than I expected it would do, are three things very quickly. I'm conscious of the fact that we are sort of getting towards the end of our scheduled time, but I'm, with your permission, I'm going to share my video screen. Just click on the button over here, because I want to tell you the story of these guys. And then, so this is Joe and Ken, and this is the first one of the little stories that I wanted to share with you, and then we'll draw some implications for this. So it's Ken and Joe. When Ken on the left-hand side there was in his late 50s, he was in the printing industry, really skilled with his hands. It was back in the day when he was younger, it was a very skilled manual job, very well paid in the printing industry, highly unionized. But by the time he got to his late 50s, the world of printing was changing fundamentally. It was becoming very computer driven. And quite frankly, the skills that Ken had were no longer the skills that was needed. He was trying to adapt to this new environment. He was in a sort of supervisory role. He wasn't a manager. He wasn't a business owner. He was an employee. He was trying to adapt to this new environment, but he was finding it really hard. And quite frankly, he was struggling psychologically. I mean, it was stressing him out. Every night he would come home and it was clear to Joe that he was going to be he was going to be ill. Now, I'm telling you this story, by the way, because it's the client, it's the thing I did with a client as an accountant. I think it's the single most important thing I ever did for a client. And there are implications of this which flow through into everything we've seen today and really give us a better understanding, I think, of why what we've seen today is so crucially important. So Ken in his late 50s was really worried and really stressed, and Joe, his wife, was even more worried that he was, it was going to do him in. It was actually going to be the undoing of his health. He was just not sleeping and so on. And Ken said to me, I would love to. I said to Ken, brother, well, why don't you retire? Why don't you just stop working? You hate it. It's not good for you. And he said, well, I can't. Of course I can't. I'm in late 50s. My pension doesn't kick in into 65. Don't be so silly. I said, well, actually, let's not dismiss the idea out of hand. Let's look at the facts. And so what I did for Ken was I produced a personal balance sheet, which was the snapshot in Gareth's language of where Ken was at that point. What assets did they have? The house and savings and so on. And what liabilities did they have? Mortgage, whatever debts there were. What was the net figure? And then with that net asset position, I produced a really simple spreadsheet with a series of columns, one column for every year between that age when Ken was 58 and 90 or 95. I forget what point we went up to. So it was one column per year. And in those columns, we took the opening balance sheet, we added in the income that Ken might get eventually from his pensions and little bits of interest and so on. And we deducted the expenditure each year on holidays and the household and so on. So we had a set of personal financial forecasts that started with his personal balance sheet and demonstrated that actually Ken could stop working now, have no income for 7 years, and still have enough assets, net assets, to fund the lifestyle that him and Joe wanted. Now, I did those calculations very, very carefully because this was it was a moment in time life decision for Ken and Joe, whether he was going to stop working. I had to redo them 3 or 4 times just to be absolutely doubly sure I got my facts right. Bottom line was Ken was able to retire at that point. The projections turned out to be a pretty close approximation of reality. They were comfortable. They enjoyed another, so from 58 until late 70s, of happy married days together, healthy days, non-stressed days, enjoying themselves, enjoying each other's company, enjoying their love, enjoying their family. And sadly, a couple of years ago, Joe died of motor neuron disease, or was afflicted with motor neuron, and sadly passed away 18 months ago. But they had no regrets because, Ken, because as an accountant, I'd stepped in and helped them make that decision. They'd enjoyed all this time in between. It genuinely shaped and changed their lives. Now, I paused, and you may have noticed that I paused when I got to one point in that story because Joe and Ken were my mum and dad. And I wasn't, in a formal sense, their accountant. I was their son. But I used my skills as an accountant to do something incredibly simple, which was to show them that if we roll forward or show them the implications of their financial position, their family's finance. They weren't even in business. This was opening balance sheet for an employee rolled forward with a set of personal financial projections to help them make a life decision, to help make things better for them. And it did. And I could not be more proud of being able to use my skills as an accountant to give Joe and Ken that precious time together before, sadly, mum and dad, before my mum passed away 18 months ago with motor neuron disease, but they had no regrets. They would have had regrets if an accountant hadn't stepped in and helped them make that decision, understand the maths, play that personal financial director. And if it's not crystal clear to you, PF director, I believe, Gareth, stands for personal financial director. That's what every single family needs, is a personal financial director. And who better than us as accountants to step in and to step up and to use our skills with numbers to help make life better for our clients, often in incredibly simple and incredibly powerful ways. Now, I had to do that with an Excel spreadsheet. And what Gareth and Mike have shown us today is a powerful set of tools that will go way, way, way above my Excel spreadsheet. But even with my simple Excel spreadsheet, even with someone whose financial situation was also very simple, an employee, and even with no business decisions or tax issues in the mix there, just straightforward, plain vanilla projections, I was able to, as an accountant, change my client's life, my mum and dad's life for the better. That's the power that we as accountants have, I believe. And I find that so exciting that we've now got some tools that allow us to do that in a more structured way than ever before. Now, if you think about what that kind of personal balance sheet rolled forward with a set of projections, playing around with scenarios, showing them the implications of the decisions, helping them make better decisions. If you think about the sort of services that we as accountants can wrap around that, in my case with my mum and dad, with Joe and Ken, I just helped them with a personal balance sheet and those family income and expenditure projections up until the point which they didn't expect they would be around anymore in their 90s, sadly, because of motor neuron. Didn't make it that long in the case of my mum. But so I just did the first two, the two that I've highlighted in the box there. But if you've got business clients, then part of the plan to create a better financial future for them will be profit improvement advice and services, and tax planning advice, and investment planning, and credit score planning, and borrowing planning, and retirement planning, and business exit planning, and capital gains tax, and wealth transfer planning, intergenerational transferring of wealth between mums and dads and kids, and so on. All of these things which we as accountants can deliver massive value through, have huge impact through, flow from this simple starting analysis of the personal balance sheet and the set of financial family projections. And that's what I did with a spreadsheet, very crudely, but that's what we can now do with Gareth's PF Director, Personal Financial Director tool. I think that's truly awesome and hugely grateful. I actually think, though, and I sort of said this right at the very beginning, that there's never been a more important time for this, because you just think what the economy is going to do shortly. Despite all of the best efforts of governments around the world to pump cash in to prop us up, you take much of the workforce out of the working environment and not creating income for months and months, which looks like we're in. The shock to the system will be unlike anything we have ever seen before. And so our clients are going to need this kind of help, this kind of reassurance, this kind of planning more than ever before, aren't they? And it's our job, our responsibility to step up and do it. And now we've got some tools that allow us to do that. And I think even before the last 3 months, the brutal truths were that the personal financial landscape, the financial landscape in which we all operate, is fundamentally different than it was 10 years ago. We just come off the back of and fully come out of and got back to the starting point, the worst recession in recorded history. And I'm not talking about the one that's starting now. I'm talking about the one that started 10, 12 years ago. We just come off the back of that, during which time real wages fell, and they've only just risen back up to where they were at the beginning, and now they're probably going to fall again. It's harder than ever to get a mortgage. If interest rates ever go back up, that's going to cripple many mortgagees. Even before the current situation, the coronavirus situation, if you took national debt and divided it by the number of families, we'd spent £102,000 per family more than we've paid for in taxes. And so therefore, in the future, we're going to have to pay that £102,000 back per family. And that's an average. Higher wealth, higher income families are going to have to pay way more than that. And that national debt is going to go through the roof with all of the spending that we're making in order to get us through the current crisis. And what that means, that huge national debt, means that in the future, we're going to have to pay more in tax and we're going to get less in services. I mean, this is adding up to a picture. These brutal truths are saying, essentially, we have to take, as individuals, as family members, responsibility, lifetime responsibility for our personal finances. And we as accountants need to step up to help our clients take lifetime financial responsibility for their family's financial affairs, because no one else can do it. No one else will do it in the professional, unbiased way that we are able to. And now we've got some tools that allow us to do that. And, if we add we think even more about the brutal truths, the backdrop, the financial backdrop in which we all operate, in which the financial backdrop again, in which Gareth and Mike have given us these tools. We're in a period when, fortunately, we're living longer, which means that longer retirement is more expensive. That's got to be funded out of, pension pots and assets. We have to build those up through careful planning. And we've got a care fee environment that decimates savings. Right the way, if you end up going into care and you're there for a long time, you can end up giving, eating into all but 20 or 25,000 pounds of everything you've ever built up as a family during your lifetime to pay for care fees. And interest rates are so low that savings income are at all-time low and lower than ever before now. And we know pensions and investments are a minefield, and increasingly there's no nanny state to bail us out. All of that adds up to a set of realities that say each and every one of us as family members has to take lifetime responsibility for our own finances, and each and every one of us as accountants has a responsibility and obligation, but also an opportunity to step in and help our clients take that kind of lifetime financial responsibility. And when we look at the tools that we've just seen, they enable us to do that. They enable us to serve our clients better than ever before in this mission critical area, and in this area that we're actually, the family is more important than the business. And why as a profession have we focused over and over and over again, almost exclusively on our clients' business needs, when really the thing that's more important, and now more important than ever before, are their family financial needs? And we have those skills. We have that opportunity. We have that obligation, I think. So those are the first two things. And my third thing was just to give you a little bit of evidence that you really can have a profound impact. You know, I had a profound impact on mum and dad, but I didn't have that impact because I was their son. I had that impact because I used my skills as an accountant. If only every accountant stepped up and did that kind of stuff. Now, it was quite difficult to spot, but if you were really eagle-eyed, you might have spotted there was some stuff on the wall behind Gareth. When Gareth was on the screen, there's some stuff on the wall. I went on Gareth's LinkedIn profile earlier today as I was thinking about what I was going to say today. And if you go on Gareth's LinkedIn profile, you will find exactly the same things that I did. You will find a series of photographs, including this one on the screen here, from Gareth's clients, talking about the impact that Gareth has had. And I guess these are the impact from a single meeting. In this particular case, it's a guy called Gary, and the impact, the quantified impact, was 10,840 quid. And if I found three straight away on the website, three of these impact statement sheets. Now, I'm really humbled that you'll notice the impact statement sheets top right-hand corner have a little logo, which is called the Get and Give a Million. That's one of the initiatives that I launched to help accountants help their clients generate additional cash and income and wealth, and then also, which is the Get a Million part of it. And the Give a Million is not give all of that money away, but use some of that additional profit and proceeds and wealth and income to be kind, to unleash a wave of kindness to help people. So for example, we take Natalie's impact statement sheet on the left hand side. Natalie filled this in and she ticked the box to say that that Gareth could go public with this. Natalie, from a business called Promo Badges Limited, by the looks of it, estimated that Gareth was going to help, or Gareth's input was going to help her get £29,000 extra, which she said she was going to reinvest in the business to help it grow, and to celebrate that, 160 blankets for children in Moldova who would otherwise have got flipping cold as the temperature drops during the winter. 160 blankets were given to children in Moldova. And how did that, the 29 grand, the ability to invest in the business and the ability to help those children, made her feel, in her own words, absolutely fantastic. And you can see Gary in the middle, you know, said this was going to get him 10 grand, and then Mark on the right hand side said it was going to get him 18 grand and makes him feel great. The point is, we have, and I have no idea what specific bits of advice, what specific bits of help were behind each of these impact statements. But what we can all see is, look at the smile on Gary's face in the middle. Look at the numbers, look at the words. I feel absolutely fantastic. This is great. Natalie said on the left, I feel fantastic. Mark on the right, this is great. The power that we have in our hands as accountants to have a genuine impact, and to capture that impact, I created these little bits of paper, which in the old days Gareth used in his practice, but I'm pretty sure now he's going to use the software tool that we've just seen to capture the impact information in much the same way, but without the pieces of paper, and that's even better. But the potential we have, I had the privilege a few years ago of researching and writing a book called The World's Most Inspiring Accountants. If anybody wants a copy, I'll happily give you one for free, because I'm now in the phase where I'm giving away all my intellectual property and not selling anything. So you can have that book if you would like. Oh, and yes, you can also have this one, Stress-Proof Your Business and Your Life, afterwards. I just give Gareth the links. You can download them straight away from Dropbox. Don't want your email address, don't want to add you to my list or anything, it's just a gift. But my point is, with the book, with the World's Most Inspiring Accountants, we researched to find what it is that really, what accountants were doing that was making a huge difference to their clients. And over again, it was simple things, like the sort of things we've seen here. We undervalue the simple things that we do. A simple balance sheet and a simple set of forecasts changed Joe and Ken, mum and dad's life. And what seems like simple tax advice and profit advice and cash flow advice and so on, what seems to us, because we understand it's simple, actually can have a profound impact on them. And in fact, one of my favorite quotes, which kind of sums it up, one of the stories in the book from Chris Holt, who's actually a business owner here in Leeds, although he was sitting in a fabulous home that he was able to build on a Greek island overlooking the sea, sort of Mamma Mia style, when he said it. And that was because his accountant had fundamentally changed his life too. And he went on to say it. And in the book, he said, I never thought I'd hear myself say this, but the more I think about it, the more I realize it's true. My accountant has changed my life. That's the power we have. That's the impact we can have. That's the opportunity and the responsibility we have when we do this kind of stuff, when we move from just helping our clients with their businesses and move to helping our clients with their family finances. Then we have the potential to change everything for them for the better, to help them change everything for the better. I don't think there's ever been a more exciting or a more important time to be an accountant. We as a profession can change more lives than ever before. And I think the impact on the profession will be profound as we will build a better reputation. We'll earn more trust as trusted advisors, and we'll earn more loyalty from our clients if we do this stuff that has that kind of impact. And as a consequence of those things, we'll win more great clients. Those clients will be happy paying us proper prices rather than paying as little as they possibly can. And because they pay proper prices, we can do an even better job. Those clients will buy more services from us because we're delivering more value and they want more help. And those clients will refer more other lovely, great clients to us. And the whole thing becomes self-perpetuating. So we end up as a profession, not only with restoring the pride and the trust and the respect and reputation of the profession, but generating more income, more wealth, more security, more pride and more job satisfaction for us, for everyone else who works in our practices within the profession, and for our clients. That's our opportunity. And that's why I'm excited. That's why I'm really excited by what I've seen today. And that, I think, is what I intended to share with you. Hopefully, that has been in some way useful. And I'm also obviously welcome to take questions, but I'm conscious of the fact that time is it has run away with us.
That's fantastic. Thank you so much. That's great, Steve.
Pleasure.
Does anyone have any questions for Steve just before we bring everything to a close? If so, as before, just drop them into the chat box as you have.
Yeah, I'm just, to honour my promise, I'm now just copying in the links into the chat box for the two books so people can download them straight away. And as you'll see, they're just straightforward Dropbox links. So there's no sign up page or anything. It's just the other one. So as promised, as a thank you for still being in the room.
I think everyone's got really hectic social lives at the moment, Steve. So I'm quite surprised they haven't left.
That's true. There aren't quite restrictions as there were 2 weeks ago, are there? Yeah, those are the links for the two books.
That's great. Thank you very much.
Thank you, Pete. That's very generous of you to say. And on that note, I think we can leave you all to go and get comfy in front of the TV and have your dinners now. So thank you so much, everyone. If you like what you've heard tonight, the next steps would be to drop Gareth a message activate your free trial and have a chat to him about integrating PF Director into your own work. I hope you all enjoy your evenings. Really appreciate you giving up a couple of hours to join us this evening. I'm looking forward to the months and years ahead with PF Director and see where the journey takes us. So wonderful, everybody. Have a great evening, and we'll speak and see you all very soon. Hopefully, stay healthy and safe, and take care.
Thanks again. See you, everyone.
Thanks again. Bye now.